Alright, y'all, so look, so we're on the charts, okay, and down here we already went over this. This is the same picture, I was just talking about. However, this is on the chart, so I'm going to show you how to confirm it. First, you see price comes all the way down. Most people tell you as soon as it leaves the water to buy, or whatever. And that's not really how you do this. So anyway, yeah, so as you guys can see, price comes down, creates this shift candle, and we know it's a shift candle because it's at least 15 pips. Okay, so at least 10 to 15 pips. The most I would say is 17, but that's kind of pushing it. 16 is okay as well for a shift candle. But yeah, typically anything above 17, I wouldn't count that as a shift candle, or just anything like really above 16. Me personally, I wouldn't count it as a shift candle, because 9 times out of 10 it's a manipulation move. You know what I mean? Like this candle right here, price obviously wants to go up, the market makers obviously want to go up, but they give you this huge candle that's, how much is it went down for at least almost 24-25 pips. So yeah, something like that it isn't a shift candle, it's manipulation. Okay, but anyway, so yeah, they give you that key reversal pattern right there, and it crosses the RSI line, not the RSI line, but the red signal line. And so this right here would have been your entry. You would have been in drawdown for about 6 pips. However, it shot up for like 101 pips, whatever. Like for like the whole bigger picture, actually way more than that, actually. Way more than that. But anyway, yeah, so get your key reversal, crosses the signal line right here, and then you enter. So remember, we mainly want to use this for a scalp. Okay, so what do I mean by that? Scalping is at least 10 to 15 pips per scalp. So some people may look for like 20 pips. I would say 20 pips is the most. However, for me, I typically do 10 to 15 pips, because 9 times out of 10 each and every shark fin out of water won't really just go crazy like that. Like as you guys can see right here, we have one that doesn't go crazy like this one went. Okay, now why is that? So price is currently trading above the market baseline, whatever, and so that's signaling an uptrend. So we'll talk more about the TDI later and everything, and how all of that works and things like that. But anyway, I forgot what I was gonna tell y'all. I was probably gonna talk about this one, but I think I was gonna say something else about this down here. I don't know. But anyway, yeah, so as you guys can see, we have a shark fin. It's not really a fin, it just kind of comes out the water, bro. This is a fat lazy shark. Okay, now this one, this one of them young active ones. You feel what I'm saying? So anyway, yeah, so right here you have your key reversal pattern right here. This candle engulfs the previous one. However, as you guys can see, it kind of shoots up for, I think it was like 15 pips. It shot up. Yeah, about 14 15 pips, whatever. So if you would have entered right here, it would have been invalid, because as you guys can see right here, it didn't cross this red signal line. However, if you would have been patient and waited, it crossed right here, so you would have took this entry and it shot down for like 21 pips. So that's why I say at least 10 to 15 pips for me. However, if you want to go crazy with it, 10 to 20. Okay, but besides that, hey, might be assed out. Okay, but anyway, yeah, if you were looking for a 1-to-1 risk reward, then if you were looking for like 10 pips on this candle, it would have hit your stop loss. So a 1-to-1 is basically you're risking 10 pips for 10 pips. So basically you want to risk 10 to get 10. Okay, so yeah, or if you were doing like a 15 pip stop loss, it would have hit that. So that's why we wait for that red signal line crossover. Okay, and it crossed with this candle. However, starting, you would have got your 10 or 15 pips, maybe even 20 if you were going crazy. Okay, also, as you guys can see, this creates an M, comes up, whatever. Yeah, now I know my drawing is ain't really M worthy, but hey, it's something. Okay, so yeah, so whatever. Price is also on an uptrend. If you would have entered early, you would have got messed up, and price is on an uptrend. So that's why we typically scalp these moves, because obviously price is on an uptrend, like I keep saying, and you might have your shark fins out the water or whatever, but price comes down for a little bit and then shoots up. That's why it's mainly used for a scalping move, okay, or whatever. Now let's talk about the fake outs. So right here, now this is a shark fin that kind of comes out the water. It nudges it a little bit, but if you look over here, this is an extreme level, so typically price is going to reverse. However, as you guys can see, you see with this candle, what does this look like? It looks like a shift candle. However, we know it's not a shift candle because it shoots down for like 20 or 21 pips, whatever. And so shift candles are 10 to 15 pips. Remember that. Okay, so this is manipulation. It's a trap move to induce sellers, and as you guys can see, they come right back with a candle about the same size, if not the exact same size as the previous one. Now, what key reversal pattern is that? A railroad track. Okay, it's manipulation. Like I said, why would they give you this huge spike down? Just to spike it up with a candle that's about the same size, also on an uptrend. Okay, now if you would have just waited and just been a little patient, right here, what do we have? We have a key reversal pattern. Okay, we have the evening star, and so also it crosses below the red, not RSI, but red signal line. It crossed right here, went up a little bit, hit some stops, and then came down. Okay, and so basically your entries right here. If you're looking for 10, 15, you would have got it right here. Actually, yeah, you would have got it right here, or it went down for like at least 35, 34 pips. Okay, but if you were looking for the 10, you would have got it. Now, if you would have been looking for 10, it almost hit your stop loss, whatever. You feel what I'm saying? However, it is what it is. That's part of the game. Don't be a bitch if it does hit your stop loss. Just, re-enter, because you do know that price is going to shift down. Because one thing we have, look at this chart, and then look at the TDI. I'm going to give you 5 seconds. 1, 2, 3, 4, 5. If you look, we have divergence. Now, what is divergence? We haven't talked about that yet. However, we're going to get into that businesses. You feel what I'm saying? But anyway, yeah. So price shifts up. However, momentum shifts down. This is one reason why the TDI is so powerful. Okay. So it's going to come down. It's also trading at an extreme high level. We haven't talked about this yet, but we're going to talk about the extreme highs when we talk about the TDI or whatever. But yeah, so price goes up. However, momentum is shifting downward, and as you guys can see, price went down for a few pips. Okay, but if you would have looked here as well, it gives you an M. What? It gave you an M? Yeah, bitch. Gave you an M, bitch. You know what I'm saying? So look, so right here, wow. I'm trying not to make it too long or whatever, so you guys can just get it, whatever. Went up, created that M. Now my things are like shifting downward below these candles because I just have them like that. Never mind. I guess the market fucking up today. Okay, but anyway, yeah. So as you can see, this creates an M or whatever, and then it shifts down. However, if you want further confirmation on this, you can look. Oh, my fault. I just hit my mic, but You can click this right here, this line graph right here, and as you guys can see, creates that M. And divergence, also the TDI creates an M as well, divergence, and shifts down. Now that's how you spot fake outs, and that's how you trade the shark fin out of water properly. Okay,